Welcome to SOFI Wednesday. Today we're going to talk about the daily chart and the weekly chart. For SOFI, we're going to look at the long dated and short dated options on this one. We'll talk a little bit about my price targets, my ads and trims, what I'm going to do long term with it. And also we'll touch on a little bit of SOFI news that's out recently and a quick look at the general market overview. So that'll be the economic data yesterday and what's coming out today. And probably a quick little chat about NVIDIA, because that's going to be what's moving the market today. So let's just hop straight in. Okay, so straight out the gate, what I love about this one is that it's confirmed the flag of support after a breakout just here. The measured move for that gets us to $10.22, but that doesn't mean it has to happen straight away, okay? You just want to make sure I'm highlighting that. It can take a while to get up to those levels. We do know SoFi loves getting to its measured moves, so that's a positive we've got going for us. That would give us a gain of about 32% there. That's from yesterday's close. So it's still way under my current fair valuation, which is around about $14. Okay, and then from the lows of the week before, we're up 29%. So don't be too shocked if we get a little bit of a pullback here. Obviously, we had this pullback and built up a bit of energy between the bull market band and the blue trend line there, so that was good. But we have popped again with quite some force, so I wouldn't be too shocked to see us hesitate a little bit more right under that red historic resistance line and then this blue trend line. That does also line up with that peak volume there, so that's reassuring. That's going to give us a good backstop there. And if we do fall back into the pattern, we do have really good support there, but I think this one's going to hold. That is going to depend a little bit on NVIDIA today. That is the big dog that is going to decide whether the market goes up or we come down in the short term, but end dips are viable in my opinion. What else do we have here? The RSI here, looking a little bit hot, not overly so though. We do know SoFi can push higher, but it'd be nice to see a little bit of a cool off here for a moment. The MACDX Plus here, we had the Golden Cross quite recently, and that's still expanding, so that's excellent, with flows also expanding. As well as that, though, institutions are gobbling up most of that, which is perfect. So this is exactly what we've been waiting to see when we were down at these lows here. Hopefully we can continue to see that grow. Like I mentioned a minute ago, my fair valuation for this is about $14, and that's about 80% from yesterday's close. My price target for the first trim, however, is a little bit lower. It's probably around the $12 range. I was going to trim out at about 10, but I'm thinking I'm going to miss that one. I've already previously taken a bunch of profit at that one, and then I've layered back in as we've come back down. I'm thinking I'm going to want to skip that one. I might, if we have any big move days, I'll probably take a little bit of risk off the table then. But for the most part, I'm very confident in what SoFi is going to be doing over the next few quarters. I actually think I'm going to end up lifting my price targets on this. So bear that in mind and check back each quarter to see what I'm doing with that. So on the weekly, we've had this awesome 4 weeks of green bars, but we can see this last one is getting a little bit hesitant. Like we've mentioned earlier, that's going to depend a lot on NVIDIA. If NVIDIA goes, the market is going to be risk on, and we should see a lot of stocks start to pick up again. There's been a lot of insurance taking over the last few days, so there's a bit of uncertainty as to whether that's going to happen. Me personally, I think NVIDIA is quite ahead of itself, but that doesn't mean it can't pop again. A lot of people have got eyes on this, so a good earnings might not be enough to justify its current price, but a stellar one, and I think that could actually be quite possible. I listened to a bunch of earnings calls this season, and a lot of them are praising and saying they can't get enough chips, so it's built up in the air. It's probably 80% chance or something like that it's going to be a banger, in which case I think the market will do just fine. But other than that, the metrics for this one, the indicators, RSI is pretty flat. So on the weekly, we do have room to run. If we can have a pop, the next kind of area above that is going to be this area here on this pale blue trend line. I haven't fully drawn it out, but that's where it'll be. It does line up there with the Fibonacci level as well. So confluence, we always like to make choices around confluence. We do have the golden cross creeping up. It would be lovely to confirm that. And on the flow, we are kind of getting into bullish territory here. We did have the golden flow, which was a great buy signal on this one. Taking a look at the open options interest for SOFI here. This $8 range, $8 price is going to be the resistance here, and 750 is the support. That's quite a tight potential move, but there is only a few days left in the week, so it makes sense. When we look further out, we're probably going to see targets move up to this gap fill and then back down a bit. So if we have a quick check. Yeah, next week's got to pop into 850. What normally happens when we get these gap fills or we tap peak volume, we get a little bit of a pullback to the next lowest support. So I wouldn't be too surprised to see price targets come back down to $8 if we put it out for another week. Yeah, so nothing too alarming there. But if we look more out to January 2025, $10 range there's been highlighted. That makes sense. That lines up with the charts nicely. What we're looking at, we've talked about potentially skipping that take profit, skipping that trim area and moving on to the next one. Mainly because I think if we do pull back from this $10 level, the next resistance is going to be kind of 9.18, and that's not really worth niggling over, that amount of money. It seems pointless to me. Probably just hold through, to be honest, but we'll see. If we get a big strong pop, then I might have to trim, just take some risk off the table. But above that, the $15 range is popular here, so that's going to be a really strong resistance level as well. That's quite a large potential move, really, for 4 months, but we'll see. And then January 2026, again, $10, very popular level. We do have a couple of bits of news for SOFI. I do have a more thorough write-up of these news nuggets on my website at thecraftytrader.com if you want to go over there and check that out. It's free to use. If you do register for the website, you can also access my deep research on my core positions like Tesla, SOFI, CleanSpark, that kind of stuff. But what I really wanted to touch on was just the Cliff Notes version of this. So SOFI has cut their APY here, as you can see, to 4.5%. It's only down 0.1%, so it's very, very minuscule. But mainly, I just wanted to highlight that we've kind of seen the peak in the APY that companies are offering. And I just also wanted to ease people's worries a little bit that other companies are also dropping right now, and it does kind of rate SOFI as one of the top providers there. So don't panic. It's not the end of the world. This is going to happen, and we're going to see these APYs roll down over the coming quarters as rates come down as well. So I think SOFI is fine. Sorry, I was just reading the next part that I wanted to talk about, which just leads me on nicely to Galileo. There is a new product in their arsenal. In short, the tool is meant to enable the business to significantly reduce the time and complexity of managing corporate expenses. So it's not the sexiest tool. It's not going to be a high earner for them, but they do have some customers rolling onto it already. They haven't confirmed if it's part of a package, a roll-up, or if it's free or if it's going to cost. But anything that brings more customers to Galileo is great. The tech stack has been suffering a little bit. I know a lot of the bears have been harping on about that, but it's not a concern for me. I think it's kind of cyclical. It's going to come back round again. Other than that, though, I think that's it for the news. Let's just take a quick look at the economic data for yesterday and what's coming up today. So for the economic data for yesterday, we had the Red Book year over year. That's the sales weighted year over year, same store. I think it's something about 9,000 stores or something like that. But it's higher than the previous reading. So that's showing some strength, which is good. The consumer confidence there as well, showing some strength. I like that. The data that I don't like is this data here, the Richmond Fed Services data. So we've known for a while that manufacturing's been in recession, and I don't see that turning around unless the government throws a hell of a lot of money at them. But for the most part, the US economy is driven by a lot of the services. So when we see a bad read like this, it's a bit worrying. Bear in mind, this is just specific so far to the Richmond area, although you can see below the Dallas isn't great, but it's a bit of a mixed bag there. But when we do look closer at the data for Richmond services here, we can see that it's not outside the normal range, but we have broken that positive trend we were forming, which It's not ideal. It's not the best. It's worth keeping an eye on that. I'd like to see that be improved upon in the next read. Um, but things are getting a bit hairy now in the market. I think we need to start paying really close attention to the low down data, the low hanging fruit data is what everyone's kind of picking up. But we're going to need to go through the bushes a little bit. We're going to need to keep a real close eye on commodities and see what they're doing as we go into this coming cut cycle. Because if prices start to move there, then we've got problems. Okay, so I touched on a second ago the Dallas Fed Services Index as well. That's also worse, but it's been in contraction since 2022, so it's on trend. So not too worrying there. Silver lining for that one though was the Dallas Service Fed was still heading up, which was nice. Fed Services Rev was heading up, so that's okay. The M2 money supply as well. I've been watching this one for a while. Liquidity, baby, I love it. It's good to see. The print is going to be starting soon. So expansion and more money coming in. That's what we're looking for. That's kind of what we're waiting for here for things to get rolling. Other news though, Nvidia, just be careful if you're going to day trade around this one because I have no idea what's going to happen. This is crazy what this company is doing. The expected move for Nvidia is insanely large as well for the size of the company. It's pretty unheard of, really. In fact, let me take a quick look just out of curiosity. Bear with me a second. The expected move for Nvidia, whoa, is between 145 and 113. Damn, that's big. That's insane. That's got to be a hell of a scalp to their value if they don't nail it. But again, they'll be pretty much back at all times high, if not higher, if they do nail it. So we shall see. But other than that, the economic data for today, when it loads, Fed Waller speech, boring. Mortgage data, boring. No one's really paying attention to that though. Or it'd be nice to see things continue to roll up. Oil, boring. Bill auction, Fed Bostic speech. So not too much exciting on today's news. So it's all going to be mainly about Nvidia. So I expect to see everyone and their dog talking about Nvidia, what their expectations. Are they in it? Are they going to trade it? I'm not touching it with a 10-foot blooming stick. Hell no, that's so much risk. I like to catch the meat of a move, like I mentioned all the time, and I've completely missed this one. So I'm going to have to find my stock somewhere else. I'll let everyone else play with Nvidia. But the main reason I watch Nvidia now is just because the market really kind of is on its back. Whatever Nvidia does, the rest of the market's going to want to do. If you found this content helpful at all, give me a like, share with your buddies, and subscribe to my channel. I've changed my kind of format a little bit, so hopefully it's a little bit better and it's a little bit easier to understand what I'm trying to talk about. And I've got rid of the weekly wrap-ups and figured I'd just start doing it daily, so it's more current. Otherwise, I feel like the data was getting a bit passed on too late. So hopefully this is better, and I'll see you tomorrow.